And it's time now for our weekly market monitor, who likes companies he says should hold up if we get a pullback or even a sideways stock market. Joining us is Bill Stone, Chief Investment Officer with Avalon Advisors. Good to see you again, Bill. Welcome back.
Thank you.
Let's start with your first pick, Walt Disney Companies. I have to say, I was there last week. The parks definitely have pricing power, and they were really, really crowded.
So you really played into it. So the themes are really, one is people really are valuing experiences over goods. So that's it, right? Going to the parks. The second one, which I don't think people think about as much, is really the cord cutting idea. So Disney has the content to go direct to the consumer over the long run. I think that's where things go. So obviously everyone thinks about the Disney movies, etc., but also think about ABC, think about ESPN. They're also in the process of acquiring some of those properties from 21st Century Fox. So they are going to be in a position to really offer that direct.
And they offer a dividend as well.
Yeah, I mean, so I think it's a really interesting, there's some worries about that acquisition, so I think it's a really interesting piece going forward.
Okay, Eli Lilly, they spun off their animal health business, but you say they have a diversified set of drugs and very strong ones as well.
Yeah, so I mean, obviously, and again, another theme, we know that, the graying of America, frankly, the graying of the globe, there is, it's a guarantee we're going to have more demand for drugs. The other good thing to know about Eli Lilly is they have very little patent expirations coming up here soon. The second part is even some of their drugs, when they come up to patent, are very difficult to take generic because the insulins are very hard to recreate. Mm-hmm. The last piece is they have a very good pipeline. Particularly, they have a couple cancer drugs. Again, they have to get through the testing and get through the FDA. But if they do, there's some real blockbuster upside to those.
Now, the last pick is ExxonMobil. And it's been an underperformer if you value it against the S&P for some time now. Why do you like that stock?
Yeah, so I think one thing is that energy as a whole has just been a dog for years. So what has changed, right? And I think what has really changed is, particularly for an ExxonMobil, and I'll talk about them in particular, they've changed their business to be able to make more money at a lower oil price. They've also focused more on actually making money rather than just producing oil. And that obviously as a shareholder means a lot. Lastly, that also means that they can pay a very large dividend. So you're talking a more than 4%, like a 4.2% dividend yield, which I think will continue to grow over time.
Bill Stone, thank you so much. Bill is with Avalon Advisors. To read more about his picks, head to our website, nbr.com.